All right, the US election is coming up very soon, and part of that has been conversations about tax plans. And so since tax is something we do a lot on this channel, I wanted to talk a little bit about what is likely to happen if certain tax plans get enacted. In particular, Biden has previously suggested an unrealized capital gains tax, and Kamala Harris, really shockingly I would say, has come out and made the declaration that she is interested in pushing for that agenda. So we're going to talk today about if that actually happens, whether under Harris or somebody in the future or whatever, if wealth tax of some form, and I'll talk a little bit about this unrealized capital gains tax versus wealth tax in some form, comes to America, what is that going to mean? Because I actually think that it's probably underestimated what the consequences will be. So let's dive in and talk about that now. Before we do, if you haven't already, please hit the subscribe button, hit the bell notification bell. Welcome, I'm Michael from Offshore Citizen. We are some of the foremost international tax and relocation specialists, and so if you're interested in that, you can reach out to us. Okay, so they've proposed this 25% unrealized capital gains tax on people with a net worth over $100 million. And clearly, what are you doing? You're targeting the sort of billionaire class, people who supposedly can afford this, and so it shouldn't be a big deal, blah, blah, blah. Of course, what do we know? We know that that always tends to expand, right? There's lots and lots of history of taxes being introduced, and it was supposed to affect a small number of people, but with inflation and time and so on and so forth, these things grow. So it will probably likely expand over time to encompass many others, and I don't think that other people are too blind to that, which is probably some of the reason why there's resistance. The idea of wealth tax, some might surprisingly hear me say, is in theory, and the theory is the key word here, probably the least distortive tax. So ideally, whenever you create some sort of a policy, you're trying to minimize the amount of distortion it creates. You don't really want to interfere with the free market. And what ends up happening when you do most types of taxes is you introduce some sort of distortion into the process. Now, say in theory for wealth tax, because in practice, wealth tax is super distortive, super disruptive, really terrible. And we can see this from what has happened in places like Norway and France, and like there's a bunch of different places that have tried wealth tax in the past. It's not a new thing. This being said, it is certainly true. There's a pressure as we have this growing gap between rich and poor for the larger number of people who are finding it difficult to get ahead, et cetera, to feel the system is unfair, and to increasingly vote against people who are seen to have a lot without really deeply thinking through the consequences of those actions. If you were to do a wealth tax properly, the way to do it would be to make it payable in fractionalized shares of the wealth itself rather than in fiat, and that would address a bunch of the issues, but the whole idea of it should be basically to then eliminate a bunch of other taxes to kind of compensate, and that's a whole other conversation. Anyway, so here's the thing. Right now, there's probably a lot of people who, from a tax standpoint, would like to leave the US. The US is in a situation where it is pretty unique. It is essentially the only place that matters where they tax you based on citizenship. I say that matters because basically the other places that do in one form or another pretty much have no ability to enforce it, or they have loopholes, or little cases where it doesn't apply, et cetera. So the US is the one exception to this. And there's a lot of people who would probably love to renounce their US citizenship and get out of the US tax system, but there are two major barriers that are going on. One is they don't have another citizenship, and B, they're in a situation where doing so would hit them with a long-term exit tax. So for everybody who wants to renounce their US citizenship, you're in a situation where if you have a net worth over $2 million, you're something called the covered expatriate, then you have this exit tax to pay, which is essentially a tax on the unrealized gains that you have. And for a lot of people, say in the billionaire class, the centimillionaire class, et cetera, those people tangibly can't really leave because of the fact that their unrealized gains are so high, right? Imagine that you were somebody who had a tech startup and your shares had gone from being worth basically nothing when you started it to you now have $500 million net worth. If you're gonna leave, they're gonna tax you on that unrealized gain. Basically means you're gonna have to sell the majority of your assets, pay this, et cetera. This is something that is really, really crucial, I think, to evaluating what would happen. So just before we kind of go on, let's talk a bit about what the proposal is. So as I said, 25% X on realized capital gains tax. They would credit it against the future capital gains. Okay, that's ever so nice of you, I guess. Only for people over $100 million. There's some nuances about if it's illiquid or not. There's some nuances about how you value the assets, because that's one of the big pushbacks. There's a thing where they're saying that in this particular case, in the initial period, I think it's you'd have something like 8 years to pay it, so you can pay it in sort of installments, and in the future, something like 4 to 5 years. Some deferral you can do, with interest in certain cases if you meet certain criteria, etc. So it's not quite so straightforward as just like, hey, we're going to tax you. This being said, I don't expect this will pass at this point in time. The country has not reached that stage yet, but definitely the pressure is in that direction, and that's a little bit concerning. So let's just imagine, fast forward, they do pass something like this. Here's the thing. Right now, tons of people have no incentive to leave because they're like, it's just too costly for me to leave. But the moment they say, hey, we're going to tax you even if you stay, then why would you stay? Just kind of think about that pretty logically. So my prediction is if that actually gets brought in, you will see an enormous exodus of very wealthy people who are deciding to give up their US citizenship. Because hey, I would have paid the tax if I left, but oh, I'm going to stay and you're going to tax me anyway. Well, then I might as well leave. And then what I do is at least all my future gains, I don't have to deal with this bullshit. That's basically what I would expect to happen. Probably won't happen now, but the question is, in what time frame? So it's worthwhile that a lot of people should think ahead and consider, should I actually go ahead and, if you're sort of somebody who's a green card holder who's considering getting your citizenship, it's interestingly, from certain perspectives, actually better to maintain a temporary visa rather than a permanent visa. There's some advantages to that because once you've had a green card for too long, you're basically treated the same as being a citizen for tax purposes. And so there's some trade-off that it makes it worthwhile to do that. For other people who are maybe early in their entrepreneurial journey and thinking, maybe I would be interested in doing that at some point, at the very least, it's probably worth investing in getting some kind of a backup plan. Unfortunately, the cost of citizenships has been rising quite a bit. The easiest alternative to do is to essentially relocate to another country or get a golden visa or something like that could lead to citizenship, and you can go there. But also there are citizenship by donation programs that you can do. As I said, the prices have gone up for all the Caribbean ones. Fortunately, the price has basically doubled. And for ones in a bunch of other countries, they've kind of closed some programs down or made it hard. So the options are not as great as they were. But that just goes to show, take action while there's an opportunity. So anyway, let me know what you guys think in the comments below. A, do you think it's going to pass? Do you think it's a terrible idea? Do you think it's a great idea? And what do you think the consequences will be? Because I would imagine that it will be a very big shift of people that will probably benefit a relatively small number of countries who are going to be the recipients of all those people. I will look forward to seeing you on the next video.